traders, this is Max here from LearnThePriceAction.com. Today I'll be discussing with you a very interesting phenomena that happens in the market all the time. It's called retracements, and I have found a very interesting way to trade retracement, especially on the gold market. What I find is that whenever there is a large move in the market, for instance, a pin bar, which is a very good signal to trade. What I've found is that uh, generally the market wants to retrace back to between 50% to 30%, and then the follow through happens. So let me show you by example how it is very profitable to trade gold by using this technique. So what I'm going to do here is I'm going to just take a few examples and show you how I would trade those. Um, let's look at here. We can see that the market is coming down here, and then once the market came down, it actually formed a big uh, bearish pin bar right here, and it actually pierced pretty much all the past three candles, and in fact 4 5 it's a couple of candles, so it's a very big bearish pin bar. So in the next candle, if you look carefully, this candle retraces back and it goes all the way up here, and then it follows through. It came all the way back here, and then again over here we have another candle, and then a little bit of retracement, and it follows through. Again a candle, a little bit of retracement, and follow through. So let me show you something very interesting that's happening here. So what I have done is I've actually taken a Fibonacci retracement and I've modified that. What I've done is that I've added 30%, 50% retracement, and I've added price value to that. So let me draw a retracement here and you will understand what I'm doing here. So if you look here, of this daily candle, by the way, this is a daily chart. Of the daily candle, this line right here is his 30% retracement. So off any large move, the market generally moves between 30 to 50 to 30%. But I found that in gold market specifically, it goes only up to 30%. So if you found this big pin bar, you could have entered your trade right here. You could have put your limit order of at, let's say, whatever the price is, at 30% entry right here, and you could have put your stop loss at about 60% to 100%, or sorry, about 68% to 100%. So let me give you an example of what kind of risk and reward ratio that comes out to be. So what I've done is I've actually modified the Fibonacci channel tool, and I've converted that to give me risk to reward ratio. So let's say I put my entry right here. So I put my entry, let's say somewhere around here, and I put my stop loss, let's say between somewhere in the 60 to 70% zone. Now if you look at here, if you put a stop loss here, if you put entry here, 30% retracement, which is about right here, you can see 30% entry, the market follows through, and look at the reward. You have almost 5 times and almost 6 times the reward of the risk you took. And let me go further up. I'm just going to take this tool out, and what I'm going to do is I'm going to actually move this one to, now the market follows through here, and this is the 8 EMA, by the way, and this is 21 EMA. So anytime market touches between 8 and 21 EMA, and you have another signal forming, you can take that signal as well. So you have another entry right here. You can see a good bearish pin bar or a signal to go short. So let's see how that works. Okay, so I draw Fibonacci, and you can see 30% entry is right here. So the next day market went down, and next day also it formed a doji and it came back. it came back to where? It came back to 30% level. So if you had your, let's say, if you put your entry right here, if you miss this move, for example, I'm just giving an example. If you miss this move and you want to enter the market again, this is a great signal. And actually it formed after inside bar. So is this one bar and this is an inside bar, and this is an excellent signal, by the way. This is a price action signal, consolidation and a breakout, false breakout. So you have an entry right here at 30%. I'll put up my limit order right here, and you have to wait for 3 days. Put your stop loss right here, and your reward is 3 times the risk. You can see right here. So this happens time and again in the market, and I'm going to show you more examples in the market right here. Now, as you can see, the market has turned right here. Now you want to get on the market, okay? So there were a couple of spots right here. I mean, you could have, this is an inside bar, and then you could have actually entered your trade right here, put your stop loss right here, below the previous low. And this was another entry point, and if you put your entry right here, for example, the break of the inside bar, and you put your stop loss right here, you have an excellent reward, which is 6 times the reward to the risk. That's another price action signal which I'll share sometimes later. But as you can see, the market came back and it touched and it formed a good signal on the ATMA, as I was talking earlier. So let's see how that works out. So let's draw that. Let's draw the Fibonacci here. Okay. So I don't know if you can see that, but 30% entry is right here. Okay. So 30% entry is right here. And see how in the next day the market came and touched 30%, and then it boom, it went up. Okay. So you could have, this is, I mean, it cannot get better than this. If you put your entry right here, you put your limit order right here. Even if you put your stop loss to, let's say, the third day's low right here, and I'm just going to put it right here, and that's your risk. By the way, that's your total risk. Look at the reward. I mean, it just keeps on going. If you bet, let's say, $1,000 here, you could have made almost $10,000 in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days. In 10 days, $10,000 by risking only $1,000, guys. I'm talking a lot of money here. So let's move further up. Let's see how it moves further down here. You have another move here. I mean, if the market was going consolidating, it looks like a great move here. Let's see how that works out. In this case, it went here. It gives you 1 time risk to reward. And over here, you have another good pin bar signal forming in the previous resistance level. And if you enter the market right here, just give an example right here, by the way. Sorry, wrong tool. By the way, you don't want to take every candle. What you want to do is you want to have the key levels. I didn't draw the key levels here. I've just drawn the recent key levels. So these lines, you can ignore them. But if you draw your key levels, these pin bars, you can take at those levels as well. So whatever this consolidation is happening, it must have happened in the past in the previous key levels. So some kind of a support or resistance was there to take this pin bars to go short after a long bullish movement. So let's see what's happening here. So you have this pin bar right here, 30% entries right here. So that's about my entry right here, and you put your stop loss right here, and look at that, 4 times the reward. Okay. So, and in fact, if you would have been more careful, you could have easily made this as your take profit target, and that's what is that? It's like a 4 times your reward. Now let's move forward. I'm going to delete this. I'm going to delete this too. And let's move on to a few other examples here. And this is a good signal that happened here. And let's see how much this retraces, because this is a pin where everybody must have taken, okay? But let's see how other people must have taken it. So let's draw the Fibonacci here. And let's see if the retracement is right here. By the way, this is such a big pin bar. I would not have put the stop loss on top of the pin bar. I would have put the stop loss around somewhere about 70% of this range. So let's see how much is that. Okay, so my entry would have been here. I would have put a limit order right here. So next day my order would have filled. And my stop loss would have been somewhere about 60% zone, 60 to 70% zone. Because such a large pin bar, I could have easily put at 60% zone. My stop loss would have been here, and that actually comes out to be in the previous, after the gap, the previous high. And you put your stop loss here, look at that. You have 6 or in fact 7 times the reward. And if you've, let's say, put $1,000 on the risk, you have what? Almost $7,000 in what, 2 weeks or 3 weeks? That's a lot of money. That just keeps on rolling. Alright, so let's go further up. I'll show you more examples. So what I want to show here is that 30% entry is a really good thumb of rule for gold. It works really great, and I highly recommend that you should look into this. Now, as you can see, the market was really bullish here. I mean, it barely gave you a chance to go up. So over here, there's another pin bar that formed in line with the trend on the 21 EMA. So let's see how that goes. So I'm just going to do a Fibonacci retracement. And look, again 30%. The market came, 30%, touched 30%, and it went up. I'm just gonna delete this one. Okay, and another pin bar right here on 8 EMA. Sorry, 8 and 21 EMA. So let's see how that goes. Oops. I'm gonna put your entry right here. That's the top. And your 30%. So 1, 2, 3, 4. Fourth day it came and touched that, and then where it went, let's see the reward right here. So if you put your entry right here, your limit order, you put your stop loss right here, and look at that. Right here on top of that. 3 times the reward. Okay. So guys, I hope you understand what I'm trying to tell you guys here. This is something that happens time and again in the market. I mean, this is just beautiful, and how 30%, between 30 to 50% retracement is respected time and again in the gold market. And if you follow these rules, you can make a lot of money, especially in the gold sector. In most of the forex pairs, the 50% rules, 50% retracement happens instead of 30% retracement. But I find that in gold particular, 30% retracement is respected time and again instead of 50% retracement. So you can use these price action techniques. These are called advanced entry techniques to enter the market and put your stop loss very tight, and reward is exceptionally high to the risk you're taking. And you can use this technique especially in gold trading and be profitable. Anyways guys, I hope you guys like my video. If you love my video, if you like my video, if you like anything else you want me to cover, some advanced price action techniques, feel free to put a comment below, or you can email me at LearnThePriceAction@gmail.com, and I'll be happy to answer you back. In the meantime, feel free to subscribe my channel, and I'll happy to hear any comments you have for the videos I'm making. Thank you very much and happy trading.